Okay, so this is the third video of my little series on how to make linked financial statements. And as before, we have sort of started implementing the best practices of keeping our assumptions separate. And basically, the name of the game is I want to create 3 linked financial statements where nothing in any of them is a direct entry of numbers. I want every single thing in these income statements to be a formula. Okay, that way, when you go to change your assumptions, it'll all just flow through nicely, and above all, your balance sheet will balance. That's the key to it all, right? So the thing is that the example from your book in chapter 2 was a little bit abbreviated relative to how financial statements are generally, all the different categories that are included in them. So the first thing we want to do is kind of beef up what's included in our assumptions. Now, I am not going to go and type these things out while you painfully watch me every second of the way, right? I have got these data points in here, and they're in white text right now. I'm going to go ahead and turn the text black and then speak to them, okay? So these are your data that came from your Elvis product example in the book, right? So these are all just the same operating data that you had before, okay? So you're going to want to, this is for 2025, the current year. You can change that year to 2016. It should flow through. Look at that. Yep. Okay. So these are the data that you want to pick up over here in your operating statement. So again, rather than putting those numbers in there, what we're going to do is in 2016, you pick up your sales. You can just pull down to get the cost of goods sold. Your gross profit, of course, is your sales minus your cost of goods sold. Selling, general, administrative, again, you pick that up over here. And your fixed expenses, which are here. There we go. And your depreciation is here. And so your earnings before interest and taxes is going to be your gross profit minus all of these. Interest expense you pick up from your assumptions. And then your earnings before interest and taxes is going to be your EBIT minus, your earnings before taxes is going to be your EBIT minus your interest. Your taxes we did not put in yet, and I'm not going to calculate that yet because I'm going to show you a better way to do the assumptions in a few minutes. So let's just leave that blank. But even though we're leaving it blank, we can set our net income to be equal to the earnings before taxes minus taxes, right? So that is how we do the income statement very quickly. And I should note, right, you're not going to be able to do that as fast as me, obviously. What you should do, right, watch this through and then come back and just, make it a fixed screen, copy this, and then move on to the next item. Well, the first thing I want to do actually is just show you all these account balances that I have. And this is where your example of Elvis products is a little bit, like I said, a little bit truncated. Elvis products did not include marketable securities, but that little sort of practice problem, or the thing that we tried to do as an in-class exam did, right? And so you wanna have as many balance sheet items as you can. I mean, every balance sheet's going to be different, and it's, hopefully by doing these, you'll know how to make it balance no matter what accounts are in there. But these are the accounts that I'm going to include in this example. And so again, what you should do is pause the video here and fill in your spreadsheet with all of these account items. And then the quantities in each year-end account balance are as follows, right? So we had 0 in marketable securities and 0 in prepaids, 0 in long-term investments, and 0 in accrued expenses and additional paid in capital. But we can, once we've set this thing up, we can mess around with the numbers, and the balance sheet should still balance. That's how we're going to test whether our model is working right. So go ahead, pause this video, enter all these numbers in the assumption page, and then we'll come back and start doing the final assumptions. Okay, there was one other thing that I wanted to do in the assumptions with you, because as we noticed while we were doing the income statement, we didn't calculate the tax. We need to have a place to put in our tax rate, and we also need to have a place to put in our dividends, right? Our cash flow issues. So what we want to do, let's leave a couple of blank lines and then have another whole section called other assumptions. And then leave a blank line after that, and I'll come back to it in a minute, right? So you remember in that example exam that we did in class that we had to calculate the dividend cash outflow based on the number of shares outstanding and the dividends per share. So let's go ahead and just put down those column headers, or I guess row headers, right? Common shares outstanding and dividends per share. Okay. But the other thing is, though, that we want this spreadsheet to be as flexible as possible. And so, you know, not all companies are corporations. Not all companies have shares and issue dividends. Some companies are sole proprietorships, and they pay their owners not by claiming dividends, but by actually just direct withdrawal, owner's withdrawal. So let's put that down as a row heading as well, owner's withdrawal. Now, we want to make our spreadsheet idiot-proof, right? We don't want to wind up double counting, right? If you've got dividends per share, then you can't have an owner's withdrawal. If you've got an owner's withdrawal, then you're not going to have dividends, right? So what we want to do is create essentially a switch. Okay, so let's, up in this row above where I said common shares outstanding, why don't you go ahead and type in a question, right? Is it a corporation or a proprietorship? With a question mark. Okay. Now, we would put corporation here, or proprietorship, right? Whatever. But the thing is, you will see that if we misspell or put the wrong word, this switch that we're going to set up is not going to work. And so what we want to do is limit the entries that can go into that cell. It needs to be either corporation or proprietorship. Okay? And so what you do in order to do that is in this cell, you keep the cell highlighted, and then you come up here in the Data tab, right? I'm in the Data tab. I was in the Home tab. Now I'm in the Data tab. And you look over here, and actually let me make this window bigger so that you can see. You look up here for where it says data validation, or if you can't see the word data validation, you just look for this icon that's got a check mark and a no mark, right? And you choose that. And so we will select data validation here, and then a menu item comes up. And what you want to do is say it needs to be something that we find on a list. Okay, and our list, we're just going to put it right here. We're going to say that this list is these two cells right here next to it. So cell C29 and C30, which we haven't set up yet, but let's just hit OK here, right? And then what we want to do in column C29 and C30 is write corporation in one, and partner and proprietorship in the other. And I don't know why that is red. Sometimes mysterious things happen on spreadsheets. There we go. Okay, it doesn't need to be bold. Okay, so now if I go to this cell, see this little arrow is dropping down here? If you click on that arrow, it only gives you two options, right? So you can just select from these two options. If you tried to put something else in there, if you tried to say corp, an error message comes up. This value doesn't match the data valuation restrictions defined by this cell. Okay, that's a really cool thing. That is something that you may have learned in your MIS class, but it's really, you know, so if I switch it like that, right, it switches just between. So now these are my only choices. Now we can go ahead, we're going to leave these blank for now, okay? And we'll come to them later. The other assumption that we need to also have is the tax rate. And that is a 40% tax rate. And now, right, this 2015 was calculating already, but let's go ahead and calculate in 2016, 40% times the earnings before taxes. And there we have our net income example matching your example from chapter 2. I'm going to go ahead and stop the video here and continue with a new one. Okay?